going to present you my TradingView account. So my TradingView account, I definitely post some analysis on here every now and then. That's pretty cool. Instagram, I usually do some charts on Instagram every now and then. So yeah, follow me, Tilting Kai on TradingView, Tilting Kai on Instagram. Sweet. All right, so I want to talk to you guys today about last week I posted a video, I think it was actually on Friday, about the bottom for the S&P 500. So that's up there, you can check that out. And then I wanted to do today's video on a little bit of pre-market analysis, what's going on against what took place last week. So just to get a start, a little head jump on the charts for next week. So I'll be touching a couple of the commodities, oil, gold, and then maybe a cryptocurrency or two, like Ripple and Bitcoin. Sweet. It'll be fun. So go ahead and give me a follow, and let's get started. All right. So pretty much everybody's been noticing the bull run that we're on for Bitcoin. It's pretty interesting, and I wanted to bring a couple things to I don't know, maybe your attention. Maybe you already noticed this. Maybe you didn't. But I've been paying attention to the also total market cap on coin marketplace, and I noticed a correlation between the stock market's crashing and what the market cap for cryptocurrency was at the time was about 309 billion. And then the stock market's crashed, and I continued to pay attention to see if we had an influx of funds to the cryptocurrency marketplace. I would be under the impression to believe that for some reason they had some agenda to move money from one marketplace to another or of some sort. But whatever, that's not the point. So 309 billion, I think it was last week, Monday or so, and then the crash started to happen, and this is about a week later. So we got from that time, I think it was like Tuesday, we got about $100 billion since that market has collapsed. I think it was said to believe that $10 trillion left the stock market in a week. Not too sure of the exact figures, but I did pay attention to see this dip and this revive here after the double bottom, and we picked back up. So it looks similar to Bitcoin itself. When you look at the chart on a lower time frame, maybe on the 4-hour, yeah, it looks similar. But we are moving a little fluent there. Oops. There you go. So now yeah, so we definitely have money coming into the market. Now, my technicals suggest that this level is holding reasonably well for the last few hours. I see a lot of people saying sell Bitcoin. I don't know if so. Those are my thoughts. I do notice that it exhausted pretty hard, pulled back pretty okay, but I don't know. We just have to see what the next move is for Bitcoin. We're going to move on to oil. All right. Oil had a series of huge technical breaks. I did set up this trade, and I did not take it. It would have been a big really good trade. I was in a different trade and and I don't know, long story. But who cares? We got some clear, nice technical breaks out of oil. Look at that. Boom, boom. Say if we find support here, you know, we're not sure how strong this support's going to hold. We got the dollar coming in, gaining strength. This could drive the cost of oil down as the dollar gets a little stronger against it. So that's important to think about. You know, and that's important to think about. So we're going to keep that in the back of our mind. This level looks like it pushed lower, tested lower, so could close a little lower. But this support down here could hold price up a little bit, but it's overdone. Oil's overdone. Oil's time for a little reverse. It had a nice run, no doubt about it. Definitely had a nice run. So it's time for oil to come back to reality. So 59.02 is definitely a key level for oil. If we close on the short side, it looks like as in our trading time frame, looks pretty good. It pulled back off this level, and then it may extend lower, filling this long wick down here, pushing you pretty deep into this structure here. That's interesting. So oil is running off hard, really hard. I'm not sure how much shorting is left, but we got some technical trends that may be coming up soon. This one here at the bottom at $56.10. We got one at $58.11, and we got another at $56. And I said $56.10. So, yep, that's what we're looking at. Maybe we'll get some consolidation down in here, I think, before we either go here to $56.11, which then would make sense for maybe the bulls to get back into the party. Maybe. We'll see. Very interesting oil. The technical breaks were definitely important. And the momentum was sweet. This break right here was I think was like the best short. If anybody took that right there, that would have been a sweet one. I was in I think I was in the pound yen trades, and I think when the news came out, the Baker Hughes news came out on Friday, and it shaved like another $1.50. Scratch that. It was actually more than $1.50. Sorry, I ended up on the gold track. It was actually more than $1.50. It was actually about $2.50. So now we're at another support. We're going to be at another support here. We'll look to see what's going on. That Baker Hughes news though that came out on Friday. Let's have a peek at that. All right. So this is the Baker Hughes news that dropped out on Friday. So basically, the information that we needed to know from the commodities market for oil was the Baker Hughes rig count. It's increased by 29 recently. So that information, in conjunction with dollar strength, which caused it to settle $2 lower. So this is the key fundamental release that comes out, I think every other week, I believe, for oil, and it's key to know what's going on to stay completely up to date with what's going on in that market politically, fundamentally, and these rig counts are quite important as well. And also, since crude oil is traded against the dollar, it's also important to understand what's going on with the dollar as well when you're putting together your analysis. That's quite important. So there's quite a few factors that's important to pay attention to trading oil. Could be a very volatile whiplash market too at times as well. So I like oil. I like oil a lot. So pretty much that's it for oil. I'm not too sure, since this was the trade I really wanted to do, was the break of this structure, but I was trading other things at the time. I think it was a pound interest rate decision that we happened to be set up really nice, and so we caught a big trade in those at the time. But not too sure how I'm gonna trade oil this week. If I do, I'll put together an analysis and I'll post it. So that's it for oil. Having a look at gold before we get ready to close out this brief market preview. I think we have one more cryptocurrency left. Gold had this big technical break, and that was definitely the confirmation for the sell-off, and it was and definitely shaved quite a bit of weight over these last coming days. It looks like though, price is beginning to slow down significantly. Allow me to illustrate it for you. Something's going on in this region right here. So we're gonna have some hardship in this price area, it looks like. Definitely gonna have a little hardship right here. Some might find this as a buying opportunity. It could pull back to the top of this zone here. Alright. So looking back at the daily, you could see the weekly. I apologize. You could see the anomaly zone playing pretty consistent. Still up until this day, this anomaly zone since July 2016, still running relevant all the way into the new year of 2018. So that price is pretty tough to break there, and it is showing the crown of its reversal right now, and dollar strength is coming in, definitely fortifying this exchange between the safe haven and the dollar. And dollar is starting to round it off its bottom and started to make a way up. Now, typically markets like to retest the lows, so this is why some people are saying long gold, as it could retest the highs. That's typical market movement, and all that should be in account